Isn't it exciting to buy a house? You get to go look at all these gorgeous houses, and then you need to decide which one you want. Well, you need one thing before you do that. And many people don't think about it until after they've picked their house. Stay tuned and I'll tell you what that is. Hi, I'm Susan Holland with the firm Real Estate Agency in Ozark, Missouri, and I'm here to talk to you today about pre-approval letters coming from your lender. Pre-approval is the key to knowing how much you can afford and can't afford. If you don't have your pre-approval letter, some sellers don't even want the realtor to bring the client into the home. They don't want somebody in there who isn't serious. So the pre-approval letter showing that you have a loan from your lender is key to getting the house that's just for you. I've had clients who have been offended, I guess, by me asking for a pre-approval letter. And it's not that I'm trying to get into their finances, it's just that I know what a letdown it is if the client isn't able to get the home that he or she has been looking at because they did not pre-approve for that loan amount. The most important step for you to take when you're ready to buy is to go to your lender first. You need to go to the lender, discuss how much you can afford and how much they will finance. They in turn will send a pre-approval letter to your realtor and to the title company once your bid has been accepted. Now that doesn't mean you have to spend as much as the lender has given you authority to spend for the loan. What it does mean is that you are able to put your limit on what house you can afford. And another thing is that it's kind of the rule of thumb that your mortgage payment should not be any more than 28% of your monthly gross income. When you go to your lender, you will tell the lender what your monthly income is and how much you're spending as far as making payments, for instance, for an automobile or to a credit card. Before you go to the lender, you need to collect some things. You need to take your driver's license, your social security card, your W-2 forms to prove that you've been employed for 2 years. And it may have been that you've been employed for 2 years, but maybe it was at a different place, but it was the same field of work. And that's okay, that's good. You need to take in your tax returns and your most recent bank statements. Lenders love to see that you've put some money aside for what I call a rainy day if you need it. And you should always have that extra money for moving expenses once you get the bid and you know you're moving into the house. You will also need your pay stubs and your property tax returns. And if this applies, if you have like a retirement account, the statements for that, and a profit loss statement if you own your own business. If you live in the Springfield, Missouri area, give me a call, text me, email me if you would like for me to help you find a lender, and I'll be more than happy to do it. Until next time, I'm Susan Holland, and I'm living in the Ozarks.